Folks, welcome back. So we're looking at the April 28th of 2025's Monday NQ NASDAQ mini futures review. It's going to be really brief. And before I get into this, if you like these kind of reviews, it doesn't take me very much time to do it. Just give it a thumbs up, let me know on X, and leave a comment. If there's a large enough interest in it, then I'll continue doing it. I'll add a dollar and forex reviews similar to this one too, if it's something you like. If you don't like it, then obviously go watch the cat videos. So here we are. We're gonna take a look at the 1 minute chart, getting right into the nuts and bolts of it all. I want you to see how the market had a dive lower, and then it rallied up, creating a high here randomly, and then came back down, taking out that low and moving a little bit lower into today, but not before coming back up into this area. So we're going to go over the salient points quickly, and I'll counsel you to go back and look at your notes. If you've been following me for a little while, at least through 2024 till present, I mentioned very specific things that give setups that I talked about this past Saturday in an X space, where it's basically the keys to infinite setups that yield. Okay, so understanding where the market's going to draw, what time the market should draw to it, all those types of things. If there is an algorithm, the market would obviously do these types of things. But if there is no algorithm, it wouldn't do these things. It wouldn't be set in motion by time. So let's go into it. Right away, I want you to take a look at these two lines here. That is a volume imbalance. And you're probably thinking, like, why are you looking at that? Well, the market created this short-term high here. So that's minor buy side ahead of the 9:30 opening. Then it opens up, and trades just above this high. And then on its way back down, I'm going to nail that right there. That's what I'm aiming for. And I gave you this low in the Telegram channel before the opening bell. And I mentioned that as just as guidance for you as a follower on X. I call it a mission possible, not mission impossible, mission possible. It's kind of like a play on words, having fun with it a little bit. But I'm encouraging you with your demo account, paper trading, to try to get two 30-point or 30 handle runs in the AM session this week, and two PM session 20 handle runs this week. Now, obviously, you don't have to do it in one day, but finding it and trying to build it around a model that you like. Things I've taught, especially the keys to infinite setups that yield. The topic I gave this weekend, albeit probably wrapped around blue collar language, it's not meant for children. I did not tell you could wear headphones or without headphones this past weekend. So that was your warning right there. But between all that, I gave you some really good information. So I want you to consider what I said there, and then what we're going to show here today. So right on the heels of this past weekend's, I guess, clinic on when things should happen, you're going to see it in the chart today. So here's an execution, and I'm working with my niece, trying to teach her, and I'm also working with Cody. So I'm trying to show him some things, I'm trying to show her some things, and aiming for that volume of balance as it went up here, as it started to come right back down. That's what I'm aiming. I'm hitting it on a market order, and I'm going to target that low right there. And you can see the close was at 19,530.75. Now, I could have very easily held it for a little bit longer, but it was built on the premise that I gave you on X as a homework assignment for the week, kind of like a challenge. If you don't pass it, if you don't complete it successfully, it's okay. But trying to do it is the point. Trying to find something, limiting it to what I'm outlining, 30 handles or 20 handles, okay? They won't always be this high. Sometimes they'll be smaller. Sometimes they won't be in any one particular session that I'm usually calling for NQ. It might be a London session. It might be an Asian session. But they're just like little challenges for you to go out there and practice in. I'm trying to encourage you to go in and engage price action with a demo. But it's 36 handles essentially, or thereabouts. And bottom line is it's within the scope of what I asked you all to do, find 2 of these types of runs this week. And here's one. Okay. And now let's break it down a little bit further. Why did price do what it did here today? Well, here is the new week opening gap for this week, April 27th, 2025. And I have the quadrant levels in there and the consequent encroachment level. So that's going to be salient in a couple minutes. And I want you to take a look at this low to this high. I'm drawing the Fibonacci from that low to that high, and I'm plotting the negative 0.5 level. And I've taught this in 2024 and mentioned a little bit about it in 2025 so far, but that's nailing the high of the day. Okay, so that's your range here is the opening range, and there's your high. You're not finding anybody else teach that. It's not in Wyckoff, it's not in Elliott Wave, it's not in supply and demand, it's not on anything, but it's good old ICT stuff. So it nails the high there and then starts to roll back over. Now, as it's starting to drop back down, I want you to go through this price run here. Where in this portion of the price run, why am I only saying that? Because it's this high that it went above. So inside this part of the range here, from this high to that high here, what is a PD array that you could use on the way down? Inversion fair value gap, right there. Old high, liquidity, with a premium array. Market trades down below it, then comes right back up here and sends it back down into the new week opening gap and then to the sell side below here. Now I'm keeping these 2 executions here on the chart so that way we can keep reference where we are as I move forward in time. 950 to 1010 macro, that's when it delivers. It starts to run here to go to sell side here. That's algorithmic. All right, so here's where we are now. That's that execution, so you can see where the opening is, and that's the high inversion fair value gap. Market trades down below that low to this level here, and then back up into first percent to fair value gap here. Now, it's a SIBI, so sell side imbalance, buy side inefficiency. As we go below it, it picks back up the same characteristic it had at creation, which is a bearish fair value gap. That's why it's shaded pink. So it trades up into the just short of the consequent encroachment of the new week opening gap here. Check that on your end, because if my memory serves me correct, it just got really close to doing it, but didn't go there entirely. Breaks lower, comes right back up, hits it again. Now, what time should the price run? Michael, why didn't it just start to sell off from here and just keep on going, take out that low? Because it wasn't time to. 1050 to 1110 macro. Here we are. Same scenario here. Lower quadrant of the new week opening gap. Breaks lower on the heels of the macro starting. Come back up with the breaker. Breaks lower, fair value gap, trades up into that as well. Consequent encroachment of the fair value gap, sends it down into last Friday's opening range gap. Oh my goodness. That's just like I said in Saturday's Shotgun Saturday. Think about it. New week opening gap down to a old opening range gap. These are like black holes. They just suck the price right on in there. It pulls it in there. It's not buying and selling pressure, folks. The market's going back to these levels to re-deliver and offer fair value. Fair value to who? To the market, not the players of the market, not the traders. It's for the market to recalibrate, go back to levels where there was inefficiencies, and gaps are the most inefficient there is. When that takes place, never forget that. And simply because we used it for the day, no, absolutely not. Listen to the rules I presented with them. We're not one and done, okay? A neophyte's perspective is something like that. We're not doing that. We carry the PD array in the future and use the data ranges to limit how far back you're going to look, 20, 40, and 60 days. Clearly, this is last Friday, so that is within the realm of being a valid or strong likely draw on liquidity. And it draws down into it here. Look at respects the high of it, consequent encroachment. works this level here, consequent encroachment. The body's respecting the low, consequent encroachment, trades outside of it, taking that low here. And this wick, we have a consequent encroachment on that. The body staying inside that, hits it dead on right there, and rallies back higher. Now, I want you to take a look at this gap here because I'm going to move forward in time and show the afternoon, but this gap here is shaded red because it's a bearish fair value gap. I'm going to extend it forward. So just remember around 19,460 or thereabouts, okay? But I'm going to extend it forward and I'm going to change it to this color here, which it denotes it's going to change its character from bearishness to bullish. So it's going to become a bullish inversion fair value gap. That's this one right here. Okay. Now you can do the same thing with this on your own chart here. Same thing. Bearish fair value gap becomes an inversion fair value gap that's bullish later on in the future. So you can test that with 19,380 and then the 19,460. But this one here, I'm going to have annotated on the chart. Here it is here. And before we get to that, here's that consequent encroachment of that wick after taking the low out. And then at 1:30, I teach you that the opening range for the afternoon session, PM session for equities, begins at 1:30 to 2 o'clock. And what you're looking for is the obvious displacement fair value gap, not these little tiny cracks between two candles. This is the obvious one here. And it comes down right into it there. Fair value gap, institutional order flow entry drill, rallies. Here's that 380, the bearish fair value gap I told you to look around, that 19,380 that I did not highlight earlier. If you find that on your chart, extend it forward and you'll see that it's using that here. Then it rallies up and it creates the inversion fair value gap that's bullish here. And the price takes off during the what? The 315 to 345 Eastern time macro. That last hour trading has this very sensitive 30-minute window. Stop listening to these people that tell you there's a 20-minute after the hour macro, a 40-minute after it. Forget all that, okay? Forget all that stuff, okay? They're making up stuff to sound like they have a gimmick or a plot to sell you your attention or to gain your attention, let's say it that way. Or even more, trying to sell you mentorship that probably doesn't work. And then it rallies up into the new week opening game. Again, for this week, blows out the high of it, and it comes right back down into it and trades back into consolidation after the 4 o'clock settlement. Again, I could have done a whole lot more talking, but those are the salient points and keeping with what I talked about this past Saturday. And I've always talked about very specific pools of liquidity and key PD arrays that I've authored. These things are in the chart today, on the heels of a fresh conversation we had during the period when the market wasn't even trading. What's the chances of all that stuff working today in your charts and on mine? I could have done a lot more trading than that, but I'm sticking to what I'm trying to lay out in front of you to kind of like inspire you. Because if you're beginning as a trader and you're looking for consistency, you have to be able to find low-hanging fruit objectives. In that morning session I called this morning, I told you that 19,471 was doable. After it ran that high, it went down and blew that out too, and even went lower. My challenge to you is to go through what was the pre-market session hours. That means 7 o'clock to 9:30. Where was the sell side liquidity there? Note that on your chart. Then find the London session. What was the sell side liquidity there? And finally, go and look at the Asian session last night when the new week began. Look at the lows that were formed there. Each one of them has relative equal lows. I was not looking to go long in the Telegram channel. It was very brief because I gave you a task this week. So I'm not trying to do the work for you. I'm pointing where you could be focusing in that direction into that liquidity. So that way, hopefully, if you've been following me long enough, you know how to frame a setup based on the PD arrays I've taught. I will give you an answer key chart with what the liquidity pools are that I just mentioned, but don't look at that post. If you look at the post in the comment section before watching this, you ruined the entire exercise for you to find that. So I'll talk to you next time. Be safe.